Hi, my name is Stephen Halasnik. Today in this video, what we want to really talk a lot about is how to get a small business loan. And the very first thing that you kind of want to cover, and the objective of this video is really to say, are you getting the small business loan because you want to start a business? Do you want to get the small business loan because you want to grow an existing business that you have? Or do you want to get a small business loan because you are dealing with uneven cash flow? You have expenses that are coming up sooner than when you get paid from your actual clients. So let's tackle some of these. First off, when you are looking at a small business loan for a startup, I would highly recommend that you don't do that for a couple of reasons. One of them, you're probably not going to get a small business loan. People who are not used to dealing with banks don't realize that banks are not in the business of giving loans to any business based on your business plan. You might have the best things in sliced bread. They really don't care. The only thing that a bank cares about is their risk profile or your risk profile. And usually what that involves is you have to have collateral to back up your loan. You have to have exceptional credit, personal credit, and you have to have cash flow in your business to show that you're deserving of a small business loan. So usually for a startup, that's, no, and no. But, listen, if you're older and you have built some assets, that's a different story. The collateral is one of the things that the bank is most concerned with. And really from a personal credit scores, they're going to want to see a 680 or greater personal credit score. In that case, then they might be willing to give you the money to start a business. But I don't think that's the right way to go, to be honest with you, in very, very beginning. Now, if you are looking to start a business or you're growing an existing business, what I really recommend is you start your business and you start getting cash flow. What that means is you start getting clients paying you. And you start really building some cash flow going through the business. And, you can sit there and say, well, if I had the cash flow, I can start my business. But I would tell you that almost all the business owners that I know didn't start their businesses with a business loan. And so, the first thing is you really kind of want to move forward with the idea that you're not going to get a business loan. If you are looking for maybe some money, the biggest thing that's been going on in the last 10 years is borrowing money from friends and family to get your business started and go from there. And that's fine. I certainly would recommend at the same time that you consider working a full-time job and then on the side, working your other business as well. Now, if you have an existing business and you're looking to get a small business for loan, a lot of what I said before still really, really applies. And that is a bank's going to want to see collateral, great credit score, and they're going to see good cash flow that are going through your business. If you don't have those things, and you're going to have some issues, but maybe once you start your cash flow going, and what we're talking about with a traditional bank is what they're going to want to see is something north of $500,000 in revenue, and then backing what I mean with revenue that you're producing per year, and then they're going to look at the collateral, the other stuff. But what I would also say to you who have your own business that's already generating cash flow is the same concept that I told for startups. And that is look for ways for you not to get a loan. What could you do? Here's some ideas. The first thing is, can you make your operation less expensive? Can you cut down the expenses? Certainly, anything you can do to have increase the gap between your profits will help you with cash flow. Can you go back to your clients and ask for them to pay you up front for the services or for a deposit? That goes a long way with cash flow. The other things you can do is ask your clients if they can pay by credit card right up front. if you don't have to carry the 30, 60, 90 days that typical business to business environment has, that really increases cash flow. And you would be surprised how many owners I've spoken with who kind of don't go for that idea initially and then introduce it and later find out how easy that is. Now, the other thing you can do is kind of go and see if you can extend what you're paying, your terms that you are paying your receivables to, or your payables to your vendors. Can you pay your vendors out longer? Can you make some type of arrangement for them? Even if you give them 1 or 2% or more extra, go back to them and say, hey, if I paid you on 60 days, could you extend me credit? And if they say no, then say, what if I gave you an extra 2 or 3%? Because that's certainly going to be cheaper than what a traditional bank is going to charge you. Now, the other option that you have, and this is the thing that one of the biggest problems you have with that small business owners who are kind of new. When I talk about small business, I'm talking about under $5 million in revenue. Once you get over $5 million in revenue, you typically have a little bit better picture on how to kind of deal with cash flow. But if you are a smaller business, the number one biggest problem small businesses have is they don't charge enough for what they do. They try to compete against the big guys, and the big guys are not competing on service. They are competing on lower price. You should be competing on service, and because of that, you should be charging more. If you look for ways how you can increase your price, that goes a long way in helping with cash flow. Now, the other ways that people are typically building their companies to is they're using a lot of credit cards. That is something that sometimes has gotten, it's not as popular as it used to be because the credit card companies have gotten wind of that, and they don't allow you to have 5, 6, 7 credit cards anymore, because every single time you apply for a credit card, it goes on your credit report, and all the credit card companies are pulling credit on you. And so, by the way, one of the biggest problems with small business owners is that their credits go way down because of that, because every time you go and get a credit card or more loans or expensive types of purchases, your credit starts to plummet, even at times if you pay it off. So that's a real problem. So, you can use credit cards to finance the business, but honestly, it's usually a very small amount of money that a credit card company is going to allocate to you. And it does affect your credit score. Now, the good thing is that once you get cash flow going, once you have cash flow going through your company, you have a lot more options. And there's things that are called like factoring. Factoring is in a business-to-business environment where you can factor your receivables. That's something I did, 20 years ago, and that was good for a short period of time because it tends to be expensive. The other thing you can look at is alternative things. Cash advances are an alternative, but they are incredibly expensive. Cash advances is when you go to a private company and they give you, let's say, $10,000, $20,000, $30,000, and then every day you have to pay them back, and it's very expensive. So typically in a 4-month time period, if you are borrowing $10,000, you're going to have to pay them back $15,000 in 4 months, which is very expensive. Regardless if you pay them off early or not, they're still going to charge you the same amount of money. Now, my company, for example, provides existing businesses with an unsecured line of credit, which is really good. You have to have an existing business with good cash flow, over $400,000 in revenue, and you have to have at least a 650 credit score in order to get that. But a line of credit isn't really used to build a new business. It's used to help you with short-term cash flow issues and relating to like making payroll, emergency expenses, having a cash backup plan. It's what I think that every business owner should really have, and it's a good way for you to build credit. But if you're thinking of using it to start a business, you're not going to be able to use something like that. So really the key here is continue to work on your business, continue to look at how you can improve your margins. How can you maybe get more out of your existing clients that you're working with as far as getting them to pay you earlier so that you can avoid having to get a business loan. But let me tell you, once you start getting involved in working with a commercial or a local bank, you really learn about the differences on what they look at as a good business versus what you look at as a good business, because they're going to look for these three things: a good personal credit score, collateral to back up your loan, and the third thing is good cash flow that's going in and out of your business. So hopefully this helps. If I can be of any help for you, don't hesitate to give me a call. And if you are looking for a line of credit, please visit us at creditlineinfo.com. And everybody, hopefully you have a great day.